So why are stock markets at all-time highs when the economy is struggling? As I said earlier in the show, GDP growth in Canada, non-existent. GDP growth in the US has actually been quite strong, but many people, including myself, believe it's because of a lack of imports. The United States is not importing as much. They continue to export, but obviously due to tariffs, imports are slowing, and that has boosted GDP numbers. Obviously, if you're not paying for imports and you're still exporting the same, your costs are down and your numbers look a lot better. But the consumer is still strong. Retail sales are up in the US. But overall, jobs, as I've said earlier, are slowing. So is the US economy slowing? That's a question that the Fed struggles with and investors continue to struggle with. But make no mistake about it, the markets being at all-time highs, is it matching the economy? And I tell individual investors sometimes that there are periods of time where stock market can get ahead of the economy. Perhaps those things don't match up. And we can show some of the charts of some of the indices. S&P 500 near at all-time highs. Look at that chart. What a beautiful chart from April lows when tariffs were announced all the way till today. S&P 500 making new highs on a regular basis. Let's go with the Nasdaq. Nasdaq crossing 22,000 almost. Well, actually, I think it came closer, just crossed 23,000. Today, 22.6. Again, just off its all-time highs. Again, another beautiful chart. And last but definitely not least, the S&P, the TSX crossing 30,000 points. That's something that I don't think many people anticipated this year. Look at that chart, beautiful chart on the back of great performances by our banks, by gold, some of the commodities, some of the tech names. These charts have looked fantastic. But as I said, sometimes you can see these situations come about where you have a weakening economy. Now, the question I think investors have to ask is, what moves towards the other? Does the economy get better and justify the gains in the stock market? Or does the stock market pull back to justify the slowing growth of the economy? That is the question that I think that people have to ask themselves. And we also know that this market tends to move more with the US data than the Canadian data. And that can throw people off as well. So people will say, Allan, I'm afraid to invest in the market because the Canadian data is so weak. Well, if you look at some of the points, and we can show a quick chart, our next chart on this, some of the macroeconomic indicators like CPI, like unemployment rate, GDP, as I said in the US, retail sales very strong, GDP very strong, industrial output. These are some of the data that comes out of the US on a regular basis. And these are the data that I think people focus on more. Even Canadians, our market tends to move more so with the US data than it does with our own data. So getting back to the question, how can the market continue to move higher when economies look to be slowing? Well, US data continues to be strong. That helps. And there are certain points in time where the stock market can deviate away from the actual underlying economy itself. And so to me, that's most important, is to figure out what's going to move towards which. Is the economy going to get better? Is the stock market going to move down? That is why we continue to look at the data and we continue to try and figure out what the data means and to figure out how this market will move going forward.